I like to use here is the 179 depreciation. That is the accelerated depreciation. You buy a vehicle in 1 year, yes, you can take all of that as depreciation in that year that you make that purchase, but that's not permanent. The second year when you have that vehicle, you have no depreciation that you can take. So that can kind of hurt you in year 2 versus year 1. Now if you buy a vehicle every year, yes, take that 179 every year. It's going to benefit you. So make sure that your tax advisor asks you questions and they want to know things about your industry and things about your business that are specific. Like the client example that I gave you, knowing who his #1 client was, knowing where his money came from, led me to know that there's a problem with his sales tax. And then also knowing, I want people to know the tax law. So I will try to teach you the tax laws as it relates to your business. So teaching you that you have to have a mileage log and what has to be on that mileage report if you're audited by the IRS. Knowing that meals like this are not 100% deductible for the IRS purposes anymore. Oh gee, that's kind of not good, but it is what it is. But if you know those rules, then you know what you can and can't take, and you're not asking those questions at the end of the year. Oh, why did you only take half of my meals? I don't understand that. Well, here's why. Because of that's part of the new tax reform too. Used to you could take 100% of business meals like this, but now it's only half. There's some little loopholes around that, so if you want to know that, just get with me. I'll let you know what those are. Other services that I offer. So I, as a CPA, and most CPAs can represent you before the IRS. So I can deal with the IRS. If you get a letter from the IRS, I can visit with them and deal with them and get the best outcome possible, generally. Yeah. I'll just say if I call and I talk to an IRS agent, if they're not telling me what I want to hear, I'll just say, okay, thanks. Hang up and call back again. Get one that's nicer. And sometimes if you're doing it yourself and you're waiting on hold for 3 hours, you don't want to do that. I'll just say as a CPA, I have a hotline. The whole time's not quite as long. So I can help set up a single member LLC. I'm going to say I don't want to do that anymore. I'm going to send them to Blaze. I do audits of nonprofits and governmental entities, so cities, counties, things like that. I can do reviews and compilations, so if you need financial statements for your banker, I can do a financial statement review or an audit of your financial statements, whatever you need there. And I also do bookkeeping and payroll. Okay, ask your tax advisor these questions. What is your personal business experience? It's okay. Do they have any business experience? That's kind of important. What kind of business have they run before? Did it file bankruptcy? You might want to know that. And what made you become a CPA? To me, that's kind of important. What is your view of the tax law? So you're asking me, what is my view of the tax law? Well, it depends on what day it is. And then tell me about, you would want to know about my team and my practice and what I do, and who else you may be working with in my firm, things like this. And where did I earn my education? That's important. There's some degrees that you cannot sit for the CPA exam because the CPA, the State Board of Certified Public Accountants does not recognize that. So you have to be careful about that. And then you want to know how your CPA invests their money. So if they're going to give you advice in investing in an IRA, do they invest in an IRA? If they don't, why? So an IRA is another thing that to me does not make your tax cuts permanent. It saves you tax that year that you put money into your IRA, but that permanent tax, you then have to pay tax on it when you get it out. Are you going to be making more or less money in 20 years when you have to draw that IRA money out? I don't know, maybe. Depends. If you're your own business owner, you're probably not. If you're building your business and it's growing, probably not going to be making. You're probably going to be making less money now than later. And ask them to give you examples of what they do to reduce the risk of an IRS audit. You never want to be audited by the IRS, but it's not as bad as it seems, because typically the IRS, when they do an audit, it's not, I'm going to audit everything. I'm only going to audit your mileage. I'm only going to audit your meals. So that's the only thing that they're looking at. And typically if they audit your business, they're not looking at your personal. Why it's so important to have that separation in your bank account, because if they're looking at your business bank account and they see all this personal stuff, they're going to start looking at your personal too. You don't want that either. Okay, thank you.
Thank you, Gayla. We're going to press on, and we're going to ask our banker to come up. He is all the way from Dallas, Texas, just because you guys are that special. David Weiner is from Dallas and with Happy State Bank, so David, make us happy.
Okay. Well, you saw the handout and whatnot. I'm not Ken Knowles. He's much better looking. What we do have in common is that we both work for Happy State Bank. We both went to the University of Texas at Arlington. We're both Phi Delts, and we both married beautiful women, and most people would say we overmarried. But aside from that, I call him my friend, and I thank him for allowing me to come in. He was called to jury duty this morning and wasn't selected, so I'm going to go ahead and stand in. In my discussion here today, please feel free to ask questions. I think Ken mentioned that he was going to be on the panel, so if you have any questions and you're not interrupted, please go ahead and ask. Mike talked to me a little bit this morning about what a bank does, what it offers. And in particular, when you're looking at a startup or an acquisition type scenario, it's interesting when you look at any loan going to a bank. I thought I'd come and talk to you about how a bank looks at that loan, so that maybe you might be able to think about some of the things as to why we ask them some of the questions that we do. We ask for some of the documentation that we ask for. At the end of the day, when you go into your bank, they're going to look at your deal conventionally first. Conventionally, it would be your traditional type loan where you come in, you're going to borrow for a loan or a line of credit and whatnot, and then if it can be approved that way, you're going to do it because it's much easier for everybody. But second of all, we always look to see, in particular on a startup or an acquisition, we look at the SBA aspect to it. And for most small business loans, when you're doing a startup loan, SBA is the right fit. And the reason being is they allow for certain additional type opportunities, such as extended terms, maybe some relaxed collateral type scenarios. But that's always key, and I think that you're going to find that your bank, if they're really good, most banks are, they're going to always look to find the right answer for you. They have to go first conventional, then follow it up from a view or an optic of the Small Business Administration. As in any credit scenario, when you're looking at it, banks always look at it from three aspects: credit, cash flow, and collateral. Pretty much in that order. Heard it said earlier, I think Mike started out talking about cash flow. Cash is king. It is king. And at the end of the day, ideally, what we see very often is people that start into business. Mike mentioned that they're very, very good at what it is they do. but may struggle or have some challenges as a learning business component to it. One of the key aspects on a startup is they tend to step into it undercapitalized. And when I say that, a lack of liquidity funds. So, when you think about that, part of starting a business is very much like building a house. I don't know if you've ever looked at or been involved with building a house. The first thing you do, you think you jump out there and it's the sticks and the brick and the mortar that everybody's supposed on. But 50% of the battle is lining up the financing and planning and everything that goes along with it. And after you've gone through all that, you think, oh my gosh, now I've got to build it. And am I ever going to get there? Nobody ever realizes that. And the planning aspect is key and so often missed when you're going into starting up a business. I mentioned about credit. Whether it's a conventional deal or an SBA type loan, SBA does not mitigate credit. Your historical data, you hear the old adage that history is a good predictor of the future. That's so key. So many people don't watch that personal FICO score. Pay attention to it. If you don't get your annual, and it does impact your business because you are the business so often when you're looking at your most of these small business type scenarios. You are the business, and how you pay your bills is a good predictor on how well you're going to be savvy, if you will, on taking care of the business aspect of your of that business finances. So know that FICO score. It's almost so much so that given that we go to cash flow because it's almost assumed that FICO is in good shape. I will tell you that bad things do happen to good people. Is it a deal buster if you have credit issues? Not necessarily, as long as there's a good story it's considered. What is a deal buster, particularly when you're looking at SBA, is if you've got judgments, tax levies, past due or charged off student loans, because that's a government type situation. The government is going to automatically, or the SBA will automatically decline you, if you will, if you have those types of instances where they're slow pay or monies that you owe them. So pay attention to that credit. It's key. I talked about where we're coming to cash flow. It's king. You're going to see that most people will be looking for, if it's a startup, well, how am I going to be able to show a history on what a business does when I'm starting it up? Well, what you do is you do what's known as pro formas. It's doing your homework to go through and look and see what all of your expenses are going to be. It's not a hard set deal, but something that shows that you've done your due diligence to go and look and see what everything's going to cost. Because at the end of the day, what you want to do is, based on what you think from your idea or your plan that you have out there, you're going to have an idea of what kind of revenue you're going to generate. Then going through and doing enough to know what it's going to cost to develop that plan, and then how much general administrative expenses that it costs you every day that you open the door. So when you figure all that out, is there any money left over to repay a loan? Obviously, if you are going to retain an existing job, a lot of small businesses, they'll start out this business or this idea as something that's a side gig, and it becomes so much of a passion and so profitable that they step into that versus the job that they've done for years. That's okay if you keep that existing job and cash flow or revenue stream coming in. That's a good thing, because again, it gives you the ability to show that there's additional income available to service that debt. Because there's not a bank around that intentionally makes a bad loan from day one. There's not one, I promise you. We're not in business to make bad loans, because at the end of the day, if it causes a problem for somebody, then there's a good chance that we're going to have a lot of headaches together, and we won't get our money back. So at the end of the day, it's a partnership, and we want to come back and we look at the deal to make sure that you're not overstepping, that you're not overburdening your situation based on what you're trying to accomplish. Okay. The cash flow or the collateral end of it is there to support the credit. A lot of times you'll find the rate is and the term is tied to how the liability, the collateral is. So that's where you come in with that. Do you have a question?
Yes, sir. So if you have say you have a town job that's paying for, so you have your cash flow, what makes more sense to fund a start business? Would it be the SBA loan or personal loan?
You're still, most banks will look at what's known as a global cash flow. So if you get your revenue in there, but they're also going to look at all your obligations, business and personal. And what they're looking for usually, conventionally, most banks will look at a 1.25 coverage, meaning you've got remaining cash available to service your debt 1.25 times. The SBA will drop that to 1.2, which again helps your cash flow a bit. So I would say on there, it really, a lot of times it's about retaining or saving that money or finding an investor versus creating more obligations that put stress on that revenue that's available to service debt. Good question. So the other thing that we do see when people get going with the credit aspect to it, they miss, there's basically two types of loan. There's a line of credit and there's a term loan. And so often what we'll do is we'll see them use short-term cash, fund short-term purchases with long-term money and long-term assets with short-term money. And when you mismatch that, by that I mean they'll try to finance a car on line of credit. Really, a line's intended to be quick. And then you've got a capital expenditure, which real estate, equipment, vehicles, that's long-term based on a depreciation schedule that Gator would talk to. Be cautious about that. Credit cards is the worst thing in the world to go and buy long-term assets on. Don't do it. Talk to your banker. Because basically a credit card, that's all it is a line of credit. So are there any other questions? I know I'm probably about out of time. I could talk about this all day.
Let's thank David for okay, our final speaker anchoring this discussion is Gary Rhodes, and he's from Rhodes Insurance Company.
Yes, sir.
It's funny how those two names are the same. But thank Gary, come on up.
All right.
And
Thank you, sir.
thank you, sir.
Thank you, sir. As Mike said, my name is Gary Rhodes. I'm actually Gary Rhodes II. The Rhodes comes from my grandfather, Bill Rhodes. He started our agency back in 1986. So he went through a lot of those same small startup business issues that you guys are kind of considering today. So I want to talk about something really, really fun. Everyone loves insurance, right? We probably have almost as much jargon as our lawyers do. I liked what what Blaze said, where the little, that insurance policy is the little guys on top of the wall. So once you've gotten your corporation set up or your LLC, you got your funding, you got your accounting correct. Now how do you protect it all? Now how do you keep that safe and keep your business running if you do have a loss, and also prevent the financial loss from hurting your business, from putting you out of business. You want to keep that business going. And so it kind of helps if you think about your insurance policy like a buffet, kind of what we just came from. So you've got your plate, and so let's say you have a building. Well, then I'm going to need my property insurance, right? I've got my business personal property. Even if I work from home, I might have a computer, I might have some equipment, I might have some tools. So there's a couple ways we can look at protecting those. We can actually sell your property policy. Sometimes for a contractor, you might just be able to do what's called an equipment floater. Then there's actually some great options there. But so you've got your first bite on the plate then, and the next probably your main course is going to be your general liability policy. That's going to cover you from really the scary things you hear of, right? When you hear about lawsuits for businesses. So that's your bodily injury and your property damage. And that's going to be, that can also be that can cover premises liability. Someone walks in here right after someone mopped the floor, misses the sign, trips, slips, falls, and sues you. That happens. We actually had a client, a janitorial services client that happened to. They were contracted to clean a floor, clean a store. They thought everyone was out of there. All the employees and customers were. Someone wasn't. Now they've got a lawsuit. Really, they were, as far as they were concerned, they're doing their job right. They weren't really doing anything wrong. Didn't do anything negligent necessarily. But yet here they are with a lawsuit on their hands. That protected them from that. You've also got your property damage. You go into someone's home and do some work. You damage something there, or a story I was actually talking to my father about, and I found it kind of almost silly, but also sad. He was talking about a commercial painter who's doing like a 3-story building on a windy day. Never thought about the parking lot behind him. Now he's got dozens of cars with overspray on them. He's got a huge property damage, multiple property damage claims there. And luckily he had that insurance. As my father said, stupidity doesn't a factor in the claim. You should still file that claim. But on that case, I would like to think, the windy day, let's not spray. But so that's the kind of things you want to cover against. And your general liability also has a couple other coverages in it. A lot of people don't necessarily realize, or kind of they look at that sheet and they just kind of move on. But it also covers personal and advertising injury, which is essentially libel. So if someone comes after you and says, we've got this, there's our main course, right? So we've got our little kind of advertising, we've got our main course. Now we come to basically, which is like the salad bar of liability insurance, okay? So there's so many options here, it really depends on what you're doing. So we've got our general liability, it's going to be the meat of our policy there, our meat of our coverage that we're kind of building up for you. We're trying to, it's going to be the main thing kind of holding the little guys at the top of the wall, that's most of them. But you've also got things like professional liability. So anyone having to do with accounts, portfolios, dealing with people's money. So for example, Gayla, I'm sure you probably have a professional liability, or what's often called errors and omissions policy. We have one, so if we advise a client and then they come back and say, hey, you were negligent, you didn't tell me something I needed, or they can come back and sue us, so we've got a policy for that. So pretty much anything that as you're talking to your insurance agent, much like Gayla was talking about with asking these questions, you need to kind of come to them, and I have a handout that hopefully will help a little bit, but it's just some things to think about, and some information, and some things to bring with you when you talk to them. Is as you're talking to your insurance agent, it's so easy just to come in and say, okay, I've got so much payroll, so much sales, and this is what I do. Okay, we can get you a policy. But if we really understand what your business is, what you're doing, where your exposures are, where you maybe need to buy a policy, maybe we can recommend something. Maybe it's something that you don't have to have, but we just want you to know for the future. That's really where that relationship is gonna really benefit you as a small business person. And so, just like your professional liability, if you've got employees, you've got your workers' comp, but you've also got employment practices liability insurance, which is basically going to cover you for like wrongful termination, harassment, those kind of things. So you let go of an employee, and they turn out to just be, a nightmare, take you to court. Well, there's your coverage right there. So if you didn't think about it, or you just got your GL, but you never had a conversation with your agent, you might not have thought about that. You've also got to think about things like, as far as like, if you're part of a nonprofit, or you actually get so big where you have a board of directors, you definitely need a directors and officers policy. If you're a nonprofit and you're trying to bring the best candidates for your board, if you have no protection for them, I'm not going to be part of your board, right? If you don't have any protection built in that says, I'm not liable for any decisions made by this nonprofit. The same for a business. So you can get a directors and officers policy. Now that may be way off in the future for a lot of you guys if you're just a smart startup. But if you are part of a nonprofit, I would definitely recommend that. So there's, like I said, it's almost kind of, with the liability coverage, it's almost overwhelming. There's just so many different kind of coverages we could look at, but that's part of that conversation you have with your insurance agent. So you come in and we look at what is your risk, where do you have some weaknesses, where are you vulnerable, where can we kind of protect you, and like I said, I like that idea of the little guys on the wall, just kind of that, because basically those insurance companies, they have much better lawyers than you could ever afford. When they go to court, they get things done, and then just look at any legislation, anything involving the insurance agency, they have a long reach, and so they're definitely going to protect you better than you could yourself if you try to self-insure. And there's other, of course, and then, so we've got that. Now we've got to look at things like our business audit. Do we drive our car? I know one vulnerability we run into a lot, and this is with a lot of contractors. So I started an electrical bit, I'm an electrician. I've just got one car right now. It's my personal car. I'm driving it to and from work. And I plan to get bigger in the future, but right now it's just me. Well, if I'm transporting materials to the work site and I get in an accident, good chance I'm this gray area where that insurance company can deny your claim. It's part of your policy. If you look at it, it doesn't cover you in a situation where you're actually using businesses. So either you need to talk to your agent about getting your personal policy. Sometimes you can add an amendment or an endorsement on that, or just go ahead and buy that. Go ahead and pay for that commercial auto policy. You'll be better covered. Your limits are higher. Let's just say, for example, on your personal auto policy, usually the maximum you can go is maybe $500,000 in bodily injury, property damage, bodily injury and property damage. Commercial auto policy, $1 million, $2 million. And then on top of that, you can get what's called an excess policy. It's much like a personal umbrella. So it's just the top tier of the policy. So I've got my GL, I've got my workers' comp, I've got my commercial auto. I can buy an excess policy, say $2 million, go $5 million. We sold one for $5 million. The guy who was an industrial contractor, and he needed to enforce contracts. So you can go pretty much as high as you need to. And so, like I said, there's various ways we can customize that coverage to kind of, to look at your business, what is your risk, what can we do for you there. And one thing I would really like to talk about to customers about, and just as a piece of advice when you're going to talk to your insurance agent, I was just mentioning contracts a minute ago. So if you're in a kind of business where you've got an MSA, a master service agreement, and like for example, not too long ago we had a guy who was a mechanic. He needed a garage policy. He's going on the site of this company servicing their vehicles. If you can bring that copy of that contract to your insurance agent, that'll help a lot, because then we can make sure you have the coverage you need. That's how we're serving you, making sure you have that coverage. And then this guy actually had to call the company. We went back and forth a few times about a couple of questions on terms, and we were able to resolve it. But, you know, if not for that, he would have run the risk of not getting a check, right? But he goes, turns in his invoice and they say, hey, I'm sorry, you don't have the proper forms on file. We're gonna hold your money. No one likes that. So that's one area where I think, like, just much like Gail was saying with your CPA, just, you know, go in your insurance agent's office, say, hey, I need 30 minutes or an hour. I want to tell you all about my business, and let's talk about, you know, what I need. And so, yeah. So do we have any questions? I feel like a school teacher. I want to watch a school teacher. I want to ask someone to. Can you guys hand these out? This is just a checklist. You can be line lead related, okay? So, and then you can be the first one to go to lunch. So, let me grab one copy from you real quick. So this is just a checklist. I'm not gonna lie. I copied a lot of this from another checklist. I went through and found some materials from some of the companies we work with and kind of compiled them into one list. And some of these seem kind of obvious, but things like accurately describing your business. So sometimes we get an insured that we've had for a few years, and upon renewal, we're talking to them and, you know, checking with, hey, so how's everything going with your business? Oh yeah, I started selling this too. Okay, well, I kind of need you to know that. And sometimes it's not a big deal, but if it's like, now you open a side business as a vape shop, I definitely need to know that because you're gonna run into a lot of problems. And then, you know, things like your property appraisal. Any updates to your building, if you're insuring your building, you definitely want to let us know so we can pass it on, you get a better rate. And we gotta keep anything we can do to help you get a better rate there. And then just things like employee counts. When you come to us, you just want to know, have a breakdown of your employee counts. Any subcontractors you have, and if you have uninsured subcontractors, let us know. A lot of people do. In fact, most contractors don't require the subcontractors to carry their own general liability insurance. They want theirs to extend to them. And that's fine, but we need to know that. Kind of finding out about that later, not too cruel. So anything like that. So this is just a list of a few things that I think might help. Yes, sir.
Let's give Gary a thank you. Okay, we're going to ask our panel to come on up here, and Ron Davis has got a few questions for the panel, and we're going to conclude.
Very few. I know we're running up on our time limit.
Yeah, and in the meantime, as they're getting ready, I know that Roman has an announcement to make here. Roman.
Okay. I'm starting a new business venture, and it's mobile advertising. I've got a 40-foot billboard that I'll be driving around town for 6 to 8 hours a day. If anybody's interested, I've got some flyers.
Okay. That was short and sweet. Okay, so if you're interested in some of that mobile advertising, get with Roman afterwards. And this is a good time for any other announcements. Paul, you got anything going on? People need to know about? No?
Not yet.
Okay. All right. Okay, so Mr. Ron, take us on.
All right. I have a whole bunch of questions, but there were a couple of themes I kind of felt like people touched on, and one of them was commingling. I found that interesting because as a business owner, I understood the commingling thing, and it's the reason I have a particular account. But I wonder if it applies to the other aspects as well. So does commingling apply to insurance? If I have something where I do business, for instance, if I work from home, and does that, you told me I should say the microphone, does that affect whether my insurance will cover things that happen at home that are business related or not business related?
That one can get kind of complicated. If you made it known, and that's the more information you can divulge and properly include when you take the policy out, the better it's going to be on the claims end, because then they know that okay, property is kept at home, and maybe you office have it at home, which most insurance companies don't have. Yeah, so you just need to make sure that everything is properly disclosed at the onset of the policy.
Okay. Well, going back to legal point of view and banking. So if I use my from a bank that I did start a business with, have I broken that wall because I'm using my personalness to start the business?
And my understanding, and he can speak more to on the banking side, but from a legal side, a bank taking in your credit worthiness to issue a loan has no legal ramifications. That's more on their end of the bank looking at the bigger picture. From a legal standpoint, you haven't commingled anything by me as a business owner going to a bank and saying, hey, here's my credit worthiness personally, and here's my pro forma, or here's my business plan for the last 3 years. That's not going to breach any kind of commingling wall at all.
Okay. And do you have more to add to that?
Yeah, I would just, can y'all hear me? I don't know.
Yeah.
Okay, maybe too much, right? Well, first off, I was just going to say real quickly, David didn't say this, but he's over our small business lending for our whole company. So we're about a $4 billion bank, about to be at 5, and all those small business lenders. Sarah Albert, who's here, reports to him, and so he's a great resource to talk to while he's here if you have a chance. We just had an instance, I was working with David on a commercial customer here, and he was starting a business, and he started it out of his own checking account, and then he morphed into creating a business account. Well, we had issues trying to document the capital or the cash that he put into the business because we were working with the SBA, and the SBA wants documentation. So the commingling between personal and business, the lack of record keeping was problematic, and we couldn't get it done. The guy's still working on it. So anytime you can separate and define whatever it is you're doing into whatever entities, away from yourself, it helps you. It helps you keep track of what you're doing. It helps third parties look at it and be able to understand what you're doing.
So when you started,
And to back that up, when you pull credit for a business, it's a different credit score than your personal credit score. Because we factor in, when you're going in for a small business, your personal credit is brought into it, but it's a different credit scoring system.
and who gets the loan? You or the company?
Well, it depends on who the applicant is.
Yeah.
Okay.
But in any regard, we'll always pull your personal credit.
Yeah.
Because going back to history being an indication of what's going to happen in the future, that's what credit scores are about. That's why banks look at credit scores is if you have a history of taking care of your business, then we're going to say, well, that person is a better credit risk going forward than if you were past due on everything you've ever had. Banks don't want to, I don't want to have to make a loan and then call you every month before you make your payment. I don't have enough time to do that with every customer I have. So that is a way for banks to look at a lot of information, distill it down into one thing quickly, and make a decision going forward. So I always, I talked to the graduating class of Trent last May. I was a banker guy that came in. And one of the things I told them is, build your credit score, protect your credit score, because there's nothing in the Constitution that says you have a right to get a loan. When you go apply for that car loan or that home loan, you're not guaranteed you're going to get that. And they're going to look at your credit score, and that's what they're going to base a lot of their decision on.
And on your commingling point that she brought up, it's factored in, it's on a different scale, but there's no commingling there. The loan is typically then issued to the business, but a lot of times, depending on the bank, a lot of them will do, say, the owner will still do a personal guarantee on that loan, but the loan is technically still in the name of the business, and that keeps the walls of separation there.
Okay.
And so
So the fact that you guaranteed it doesn't break that wall.
you're doing that in your personal capacity, which is fine.
All right, so the other thing, I think this is probably a big question that didn't come up, but looking around at all the people who have startups or starting things on their own, is the do-it-yourself versus hire one of you guys. Why should I hire you to make my LLC, which is probably going to cost me quite a bit of money, or I can sit down, find a guide online, go to the and fill out the form and make an LLC. And the same is, should I have you set up my books, or should I just figure out how to set up my books on my own? So we'll start with you two, and then I'll figure out a way to make it work for the other two.
With me or with her?
With you, let's start with
Oh,
Lawyer,
okay.
yeah.
I was gonna let you go. So I get that question a lot, and it's very, it's doable for someone to do their own LLC. You're not required to do that, hire an attorney. What I tell clients is if you're doing a single member LLC, those are a little easier to set up, and so as long as you dedicate enough time to research and do it yourself, 20 to 40 hours, really actually learn, well, why is this clause in here, and why am I doing this, and making sure that you have all the documents there and signed, you can do it yourself. With a multi-member LLC, that's probably, I would never advise you tackling that yourself, because that has a lot of ramifications, both from a tax perspective, but also from a governance perspective and all that. But from a single member LLC, they're doable. I still see them screwed up quite often, and so I still don't recommend them, just because I don't think the software there is there yet. And people, and I was talking to her before we spoke, I think, I've never gone through the process online, but I'm guessing that it's, you buy it per item. And so maybe I spend X number of dollars to buy the articles of formation, but the operating agreement or the organizational minutes or the election of the officers, those are separate documents that this online place is going to charge extra. Well, I don't need that. I don't want that. I'm a brand new business. I just want to spend the minimum amount, and so I'm just going to get the articles of formation. But really, what you bought is a name reservation. You haven't bought the walls of protection. Your operating agreement is the walls of protection around it. So you've really bought that, but you haven't bought your protection, which is why you want to be an LLC in the first place. And so just understanding why these documents are in place is kind of half the battle. But I do, I'll have plenty of clients that will do it themselves, and I would say probably 30% of the time they do it correctly, and I tell them you did a good job, and I don't need to do anything here. The 7% of the other time they bring in their documents, and I look at them, and they never signed them. This was 5 years ago. You have all the documents, but you just never executed, or you have your articles of formation, but you don't have any of the other documents, or there's no names in there, or whatever. So they just printed them off, blank ones offline. So it's doable, but it's not something I recommend. Maybe in 5 or 10 years, the software will be there, but it's just not there yet, in my opinion.
Yeah.
So my thought on that is, in the end, I will save you more money than what it cost you to start from the beginning. So if you wait 3, 4, 5 years before you bring on a CPA, it's going to cost you more money in those first 3 or 4 years than it would have cost you to hire a CPA to help you out from the beginning. A lot of different ways that they can save you money.
And that is a conversation that I'll have with clients, because when you're starting a business, especially the brand new ones, every dollar matters. And it's, I want to spend this money on advertising or getting my product. I don't want to spend, hundreds of dollars on an attorney or CPA. And so they're very conscious of how much each thing is costing at the very beginning. And so it is kind of that balance from an attorney perspective. I'll tell them, you can spend this much now, get it done correctly, you're protected, moving forward, etc. If you don't, I understand, your dollars are very crucial at the beginning. If you don't, you want to do it yourself, devote the time, etc., hope it works. If it doesn't, just factor in that you're going to be paying me 3 times the amount to fix it, hopefully be able to down the road. And so if they do that cost equation and go, you know what, I'm going to be making $100,000 by the end of the first year, I can spend, $5,000, $10,000 to correct it. All right, that's on their call. It's not going to be a course I recommend, but I understand the dollar amount kind of balancing of this is going to cost me too much in the beginning. I just can't afford it, but I'll be able to afford to fix it hopefully down the road. So there's that balance. Kind of agreeing with you. Yeah.
What?
Can I add a little tidbit to that? And they touched on it. When you're talking about whether or not to hire someone versus do it yourself, I always look at, for any business person, what's the value of your time? If you can do an LLC on your own, but it takes you 20 to 40 hours to make sure you do it correctly, what is each of those hours worth to you? If you were out running your business, if you're out making sales, if you're out doing what it is you do, what would you have made in that 40 hours? Is it more or less than what it costs to hire you? So that's always always a kind of a factor in my head to anything like that, any question of that sort is it worth my time to do it rather than pay someone else to do it if it takes me longer to learn how to do it, right?
Gee, somebody pays attention to opportunity cost.
And but then the question is your hourly rate less than a lawyer's?
Yes.
Taking away though.
So what, one of the questions I was gonna ask, and I'll morph this into, what processes would you like to see new clients implement as soon as they become your client? And then a second question, not related to that, but well, I'll tell you the second question later. Go ahead and answer that. What would you, as a banker, we'll start with the banker here, would you processes you would want to see a new client implement in their business to make their relationship with you easier?
Well, first off, I kind of a two-part answer. If you're starting a business, I highly recommend people go to the SBDC here in town. They do a wonderful job of helping people put together business plans. And a lot of people have great ideas. They created a great product or a great service. They know it, and they know it like the back of their hand. But when they go to the bank, they can't get it on paper. And so that the SBDC does that. They do it for free. So I highly recommend them. We work very closely with them. Once they become operating business, they become a customer. On a regular basis, the ability to create financial statements so the business owner can see where they are, see what's going on with the business. It's a management tool for the business, and it's a tool that the banks use to be able to monitor the credit and monitor the business. And so the ability to have accurate financial statements on a regular basis is something that banks are always going to look for.
Yeah, I would echo that. One of the first things I always look for is the quality and the completeness of their financials. Do they have a CPA involved? If you've got somebody that's working with a CPA, they're licensed by the state, they've been through, you can say it's about a term two, but you can count much higher with that CPA prepared documents.
I would say record keeping. A lot of people are not good at it. A lot of people hate it. And if you're not good at it, hire a CPA to do it, or hire someone on your staff to just keep basic payroll, and then make sure your CPA has it. But I would say that's the biggest issue that small businesses have, possibly failing as well, besides mismanagement, but lack of record keeping, just from a ongoing basis. What are your margins? Are you making a profit at the end of the day? Or you're not? What's your product cost? How much is your overhead? Just those basic questions. A lot of people, they never actually sit down and make a budget or keep track of their receipts or anything like that. And so it really causes headaches when it's tax time, quarterly tax time. But also, if you're building your business if the end goal is to sell it, that buyer is going to want to see your records. They're not going to take your word that you're making $500,000 a year. They're going to want to see the books. And if it's here's my pile of receipts, good luck. Your value of your business is going to go down to that buyer. So even if that's not your end goal, but it's a possibility, look at it as a building value in your business by keeping better records. And if you know that you are not good at keeping records, you just don't have that mind, spend the money to hire someone or hire a CPA to do it, because that's going to be your biggest headache as a business owner, but also can be a huge contributor in your value of your business if you go sell it down the road.
Right, and so in my business, what I tell people, kind of like what you said, I would not go out and paint a sign if I'm not a sign painter, nor do I expect you to keep your books if you're not a bookkeeper. So I would hire an expert to paint my sign. I would not try to do it myself. It would look like a first grader did it. Probably not even that good. But anyway, so that's kind of the first thing I would like to see them do is to implement some sort of bookkeeping system of some sort, and don't commingle your funds. So if you bring me your bank statements and you want me to prepare your tax return based on those bank statements, the odds that they're accurate when you commingle your fund are pretty slim, because we may pull something that shouldn't be there, or we may miss something that should be there. And it's usually, we usually err on the side of conservative, so we usually leave things out. So you could have saved more money on taxes if you didn't commingle your funds. So that's two things I would like to see a business owner do when they first start.
And insurance?
I would say have a CPA, because a lot of times when people come to us and so we're talking about their business and we're trying to get the financials so we can get kind of even just quote that and get an idea of an indication. A lot of times I just say, what was your, you have your receipts for last year and your payroll, and a lot of times I just get like kind of ballpark figures, and I feel more comfortable with the clients where I can. Sometimes they have their CPA fax over something, or they're a part of that conversation, and so I feel like okay, we're getting a more accurate picture because you often will be audited at the end of the policy period, and so it's not like you can hide that. They're going to ask for your records, and if you send up your records and your numbers are accurate, you're not going to run into a problem. But if you got really, really busy last year and you never let us know, your CPA never gave us a call or anything, you're going to end up owing thousands of dollars in extra premium. And so I really love the customers. I really love the customers who come over and they've already got a CPA or at least have good organizational skills. And so it makes my job so much easier doing what I need to do for that.
Yeah.
I was just going to say that kind of a dichotomy between tax CPAs, tax preparers, and banks. As we look at the same company and we actually want two different things. Customers will come in and they'll go to their CPA and they say, I want to pay as little in taxes as I possibly can. So they will do everything they can to create the least amount of tax liability or just show losses. And then they take that same statement or tax return to the bank and say, here, loan me money. And we're looking at it and there's all these losses there and we're going, oh, that doesn't look very positive. And so we're always in trying to adjust those or figure out a way to make it work. Again, we're looking at the same thing, but from different sides of the equation. And so that businesses should always keep that in mind too, is that banks are going to be looking at not only your revenues, your profitability, and your cash flow. But
all right. Well, thank you all for coming and speaking to us, and we'll just conclude that there because we want to respect everybody's time. It's 1:30, and I will turn back to Mike to close up for us.
Thanks to the panel and Ron and all you guys being here. We meet for lunch every Monday, usually just from 12 to 1. So you can go on the website, venturecall.com, and you can see where we're having lunch next week. If I was really prepared, I could tell you where it's at, but it's on the calendar. So feel free to visit and meet some of these folks as long as they can stick around. And thank you for coming today.